Hello, welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. Today, we're talking about expectations for Ralph Lauren's upcoming earnings. Looking for a stock that has been consistently beating earning estimates and might be well positioned to keep the streak alive in the next quarterly report? Well, then maybe you should be looking at Ralph Lauren. This upscale clothing company has seen a nice streak of beating earnings estimates, especially when looking at the previous two reports. The average surprise for the last two quarters was 33.57%. For the last reported quarter, Ralph Lauren came out with earnings of $2.94 per share versus the Zacks consensus estimate of $2.17 per share, representing a surprise of 35.48%. For the previous quarter, the company was expected to post earnings of $1.99 per share, and it actually produced earnings of $2.62 per share, delivering a surprise of 31.66%. Thanks in part to this history, there has been a favorable change in earning estimates for Ralph Lauren lately. In fact, the Zacks earning ESP expected surprise prediction for the stock is positive, which is a great indicator of earnings beat, particularly when combined with its solid Zacks rank. The Zacks earning ESP compares the most accurate estimate to the Zacks consensus estimate for the quarter. The most accurate estimate is a version of the Zacks consensus whose definition is relative to change. The idea here is that analysts revising their estimates right before an earnings release have the latest information which could potentially be more accurate than what they and others contributing to the consensus had predicted earlier. Ralph Lauren has an earnings ESP of 26.67% at the moment, suggesting that analysts have grown bullish on its near-term earnings potential. When you combine this positive earnings ESP with Zacks giving the stock a hold, it shows that another beat is possibly around the corner. The company's next earnings report is expected to be released tomorrow on May 24th, 2022. Investors should note, however, that a negative earnings ESP reading is not indicative of an earnings miss, but a negative value does reduce the predictive power of this metric. Many companies end up beating the consensus EPS estimate, though this is not the only reason why their shares gain. Additionally, some stocks may remain stable even if they end up missing the consensus estimate. Because of this, it's not really important to check a company's earnings ESP ahead of its quarterly release to increase the odds of success. Making sure to do due diligence and staying ahead on the latest news with the company you're looking at is the best way to be in a favorable position when you're dealing with a company's earnings. But let me know what you think below. I'm excited to see what Ralph Lauren does this quarter, and I'll definitely have to touch on it on Morris Money. But let me know below, do you think Ralph Lauren is going to beat earnings this quarter, miss this quarter, or meet expectations? Let me know what you think below. Please don't take this video as financial advice, and thank you for watching Morris Money.